Have you ever looked at the market and said, damn, I predicted this shit to the T. I'm the GOAT, man. Well, that's what happens once you start trading a liquidity strategy. And don't think you trade liquidity just because you're an SMC or an ICT trader. We is not the same. I'm talking about the real liquidity. The one that will have you predict the markets to a T, seeing the highs, seeing the lows being taken, having market reverse from there, understanding every single piece of movement in the markets logically and putting some sense into it. One thing that a lot of people don't know about liquidity is that it's way more than just equal lows, equal highs, trend lines. There's way more to it because there's previous daily low, previous daily high. You can count the weekly high, weekly low, the monthly high, monthly low. There's inducements. There's liquidity above every single high and liquidity below every single low. There's a ton of liquidity in the markets. There's sessions as well. And once you start to spot them and seeing how market reverses, as soon as we take them, you'll start to understand that you figure out something here. Now, have a look at my charts. You see all these lines, they ain't placed randomly. You see where price reverses from every single time we take them. Well, this was one more refined one, but we can easily put it here below this week, where people would position themselves, and right now they got stopped out and price reversing from there. That's exactly it. Right? That's the whole point of liquidity, is taking people out to then be on the right side of the market. Because the right side is only 1%. It's only 1%, you know it. So if everyone's trading ICT and SMC nowadays, then the market has to manipulate even more. And I'm sorry if you're an SMC or ICT trader on that side, but those concepts just got too basic because they just got too popular. So someone would look at the price action like this and say, damn, that's shit. Well, I would think in the contrary, because you can see as soon as you take one liquidity, one high, right? Because there's liquidity above every single high, below every single low. As soon as we take some, we go into the other. And then as soon as we take this, we go into the other. And then as soon as we take this, we go into the other. You see how this goes. We go from one liquidity to another. No bias shit, no trends, no bullish, no bearish, just pure range going from one liquidity to another. And that's how you predict. Just because it makes a low doesn't necessarily mean we're bearish. Or just because we make a new high doesn't necessarily mean we're bullish. And the beauty of it is just that we can trap people all around these areas. And that also comes to my next point, which SMC and ICT traders can see the liquidity, but they can't manage to position themselves on it. Why? Because now I'm going to tell you why I really differentiate myself from the SMC and ICT traders. Is because I have this concept that's smart money traps. Now, let's say that you have this liquidity right here, right? This is an inducement that's like a fake high, fake low, right? A secondary one, which didn't take no liquidity, so it's down to be taken. It's making equal lows on the higher time frame, right? Within a couple days. It's making another equal lows with London, and it's the previous daily low off of this day. So just this one liquidity is an inducement, equal lows, previous daily low, session low off London. There's plenty of liquidity in here. And once you take it with impulse, you can see there was some reaction out of this. Now in here, there's definitely people that are already trying to play the retracement that are positioning themselves on the M1 breakthrough structures. The thing is, we do a double sweep. And even if you don't understand this whole smart money trap concept, you can just adopt the fact of waiting for a double sweep. Before you position yourself on the liquidity sweep, just wait for price to basically take you out on your idea. You have your idea set, but you don't take it as normal as you normally would, and you see it get taken out, and that's where you position yourself. Because me, for my case, I want to position myself once everybody has been taken out of the markets. That's where I position myself. That's how I'm alongside with a real smart money, and I get wins like this. This trade, I actually called it out for my students, and I also got the TP hit on live stream. So imagine, the major liquidity is to trap the support resistance traders. Then the lower time frame one that's made following the liquidity sweep is to trap the SMC traders. Now, of course, it doesn't always happen that way. Sometimes we might have setups where we just have one sweep of liquidity and the market has gathered enough liquidity to just move to the opposite way. Right? But here we're going for the same thing. We're going from one liquidity to another. There's still people that will position themselves right on this order block. because it just made a low and because it was a huge impulse. So I'm pretty sure there was a lot of SMC traders having their limit here and getting stopped out. And you can also adopt the smart money trap cycle with this, which is basically to say that because this was a trap, this will become a trap. And guess what? If we go to the right, boom, taken. Now the markets have been kind of gay, not many opportunities, not that perfect setups, but you can see it right here as we got the same exact thing. You can go either by having the liquidity swept and some change of character, or we may have something like this, which is just a beautiful reaction off of it. And perhaps you're saying, oh, I wouldn't get trapped myself in here. But look, following this London sweep, it wasn't just one reaction, it was actually two. Because price give you this beautiful candle and people are already expecting the retracement, trading this, price is breaking above these areas and then decides to sweep it again. Again, this will probably during news, but news are just setup accelerators. Go watch my video on how to trade news. You'll understand that's basically with the liquidity concept. But if you want to extend the time frames a little bit, it's the same concept. Previous daily low getting swept, get swept once, get swept twice. If we zoom out, right? But at the same time, you know that sessions are also a liquidity. So London sweeps it, but it's late London, okay? So this is blue box, it's London. New York comes around and it likes to sweep London. But it has to be also two sweeps within the same session. It has to be smart money trap inside the same session. Just on the day before, you can see the same thing. Beautiful rejection, right? This is a beautiful rejection for a lot of people. Of this Frankfurt high getting swept, this Asia, and then they'll be shorting around this level. They get trapped, and then price goes the other way. And in this, you can watch my video on how to trade London close, because London close will give you a retracement of the day. That's another good thing to know. Of course, because there's a lot of things that go into this strategy. There's not simply seeing a liquidity sweep and then trade it, seeing a smart money trap. There's a lot of liquidities in the markets, there are a lot of smart money traps being executed, but we have biases, we have confluences on our side. So there's a lot of things that you got to put in account, but the main strategy is this. You go into your day, you see the price section, you draw your liquidities, high and lows, and then whether you sweep the highs, you look for shorts, whether we sweep the lows, you look for buys. But remember, inside of these, if we want to be trading the lower time frames, we have to expect a lower time frame trap to be executed. Looking at EU, we're looking at GU, because those are the pairs where the smart money traps are most present and where you can take this to a better advantage. But just know liquidity works everywhere. So if you want to trade gold, if you want to trade oil, if you want to trade fucking soybeans, liquidity works everywhere. You've seen me doing backtesting on pairs which I never traded, doing amazing results. You see me backtest liquidity on EU or GU in 2008, 2003. It worked then, it will continue to work 40 years from now. The markets will essentially not change. This is why I was able to take this concept and also apply it to futures, because you want to be adaptable as a trader. In case something happens, you can easily go change to a different pair or a different domain. That's how I went from having 5 years experience on Forex, and in a single week of trading futures, I was able to get myself funded. And you can check the whole documented journey in this series right here. So go check that also by just subscribing, leaving a like, and check my host channel. That way you can really make sure you become profitable this year and get yourself funded. All right, it's been a pleasure. Hope you like it, and see you in the next one.